Oh, not yet. All right, there we go. Finally, good thing I always do those audio checks. All right, guys, good morning. Like I said, usually not used to seeing you guys bright and early in the morning. Glad to be here. All right, there we go. All right, guys, happy Friday. Hope you guys are doing fantastic. While we're here on YouTube, you're probably asking, bank this week, closing out the month of June in monster profits. So just going to be tape reading. Was going to be doing it with the community regardless. So I figured, might as well just get on the YouTube with you guys, sort out price action. Ask you guys can ask questions, and I'll get to those as I can throughout the session. So just be a chill one here today. Going to close out the Friday. All my targets on the upside were reached, and I've met my profit objectives, which puts me in a good situation, and I just get to sit back and chill. So just going to be tape reading here today. Let's go ahead and take it from the higher time frame. We'll start from the weekly here. And I'll teach you guys some interesting things with the implied dealing range today. So we finally broke this high here. Now we have this high back here is the other relatively equal high. But we did reach that first target of that 780 level on the upside from the down close candle, bullish order block, market taken up into the buy side there. Daily chart, this gap here, treating it as an inversion gap. Market closed above it, use it as support. We had that small little void in there. I've been talking about that the last day or so on the YouTube reviews. So this little range there, that's an inefficiency. Extend that through, and you can see that's going to be useful for us. They reached through that. They took out the buy side here. So you guys may be asking, TGIF, is TGIF going to be in play? I personally, when the markets are at all-time highs and we still have targets to be reached, I'm a little more reluctant to try to go short. But now that we have reached this buy side here, TGIF retracement, which just means a retracement in 20 to 30% of the weekly range. So a retracement would be reasonable based off targets being reached, and we've been one-sided all week higher. Right? So all the way from Monday is open, just ripping higher, reaching all those upside targets. Down to the 15-minute. Here, that was yesterday's action. Really easy price action yesterday. Easy Judas in the sell side, and then market just ripping higher. Let's go ahead and get the midnight opening on here. Let's take the buy and sell buttons off here. All right, so 15-minute chart, right out of the gate during the London session, market shoots higher. They take out that daily high, which is going to have a lot of fund level liquidity, right? You might be thinking, why is this high important? Because there's going to be a lot of fund level stops above that high that tried to go short with stops above here because they see the resistance there. So looking at the 15-minute chart, they swept that buy side there, and now the market's trading back into the range. They cleaned out the relatively equal lows here. So if we are going to see a TGIF, let me go ahead and see what that would be here on the weekly candle. All right, so we'll just keep that range on here. All right, so that blue, shaded range here, that's going to be the 20 to 30% retracement if we need that information here today. So let's drop down to our 5-minute. Still a bit of a ways below. But all right, so 9:30 opening. Buy side taken, sell side here. Let's see what we have here. Equal lows down below. All right, so interesting. Let's see what we get in the open here. We have sell side here. Sell side here, that's already been cleared going into 9:30. So we'll see what type of action we get here. Drop down to our 1 minute. Let's see S&P here. Now that the volatility index or the VIX has dropped off, I haven't been trading too much S&P. NASDAQ's been a bit better for me this week because the VIX is like below 16 right now. I opt to trade the NASDAQ because then S&P doesn't move enough when there's not that much volatility. When the volatility is nice, I love trading S&P because it's really clean, very systematic in how it delivers, but it gets a little sloppy when the volatility is really low and there's just not a whole lot of movement on the S&P. All right, so we're trading back down into that daily void there. We have the equal lows here at the 60, 86 and 3/4 level. That would be sell side there. All right. Sell side equal lows here have been tagged. Right. Market's bearish. Right. Clear sell program. Up close candles and efficiencies respected. It's just going to reach down for sell side. These lows are relatively equal. If you watch the one setup for life, you'll know to look for that. So equal lows there. Toasted. Now we'll see what they do off the open. So now they worked into sell stops right off the open. So we'll see what they do with that from there. Just doing some measurements here on my other charts. Was not here as early as it should be, so having to get some of my measurements here done now. What are you measuring? It's top secret. All right, there we go. All right, so two things here. Sell side taken here, these lows, and then also dropping below that midnight opening price as well. So we'll see how we trade there. That daily high that they took out, it was just a small sweep of that high, so it wouldn't be unreasonable for them to want to do one more pass up above that, just because this was a really shallow run. All right, Forex Factory. So just the high impact news at 8:30 today and 10 a.m. Just medium folder news. All right, so it should be a decent session today. All right, so sell side taken. They took out those lows. Now we'll see if we can trade above that high there. If we take out that swing high, look at that as a shift in market structure for the market to look to work higher. Haven't seen the chat today. Just dialed in on price action. I will chat with you guys here in a moment. Sorry, I just want to get everything set up here so we're on the same page. Also, mindful of this opening range gap here. So on RTH, you can see this regular trading hours gap here. So you can see we also worked down into that. So there's actually two things that were there. If you measure the range here from where we settled to where we open, that's always going to be a nice draw here, first few minutes of trading. And then how we trade there is really important, right? An example of that is this day here, right? What allowed me to have so much confidence going long here was the fact that they dropped into that opening range gap. See how they left some of that open? That's telling you it's really bullish, right? So yesterday was easy longs after the Judas here, manipulation at 9:30. Retail's taken to the slaughterhouse, and then you're able to go long for the easy price leg into buy stops. This blue gap here, I'm watching that. I want to see how we trade that. I want to see, does the market use that as support, trade higher, or do we trade down through it? If we're going to be bullish, I want to see that gap here, support price. And then the current buy side would be here. All right, so a little sloppy here at the open. Closing below that gap here. All right, so we saw a closure below that gap here. If I'm bullish and I have a gap, I don't like to see it close below it like that. That's usually no good for higher prices. So that's what I'm saying. Before I like anything higher, I have to see how this gap here supports price. But then we ended up closing down below it. So I want to see how this body candle closes here, right? Do we stay below it? Do we respect it and sell off? Or do we get above it, support, rally? Let me see S&P. So you see S&P here is really nasty. So for the mentorship group, you guys can see how I've been trading a lot of S&P really the last 2 months, 3 months, when the volatility's been out of this world. And you can see that with the volatility index here with the VIX. So let me go up to like the daily chart. So you can see when the VIX really pumps up, the S&P, NASDAQ will have massive ranges. When that's the case, I actually prefer to trade S&P over NASDAQ because it's cleaner in my opinion, and I can trade with stop losses that are more manageable for my trading style. But when that volatility is really low, I mean, look at the ranges now on S&P. I mean, it's like 4 points, so it's super small. So when that volatility is low, I don't prefer the ES as much. And then I'll trade NASDAQ because when that volatility is low as well, I'm easily able to have about 20 to 25 handle stop losses on NASDAQ very easily. So I'm very comfortable with that risk. So that's about $400 to $500 per contract. So I'm comfortable with that. All right, so a little bit of coloring outside lines with this gap here. That's cool. Still respecting it. We're above it, trading above this high here. So now that sell side's been taken, looking at this as of right now, it's shift in market structure. And then we'll look for the market to work higher here. So let me see what range we have. All right, so now what I need to see now is this down close candle here. Support price. If we're going to reach higher, we shouldn't trade through these two down close candles here. Just treat that as a bullish order block. And then I want to see this buy side taken here at the 746 level. And then the run higher ultimately above the 788 if we keep running here. So far at 9:30 they dropped it lower. That's a Judas sell side taken and below that midnight opening price. So now we have buy side here at the 746 and then this small gap here at 760. So two targets I have is the buy side here. And then through that buy side we have this gap here that I like. It should be fast now. Sell stops have already been taken. Shift in market structure bullishly. So that should set everything in motion for the market to rip. Hey Discord, hopefully you guys were able to make it in here. Happy Friday to you guys. Don't want you guys to think I'm ignoring you guys. I'm gonna come back here once I get a moment here, but it requires my full focus to walk this thing on a leash here. So appreciate you guys being patient. Kieran, I'm doing good today, sir. I'm feeling amazing, man. Feeling amazing. Absolutely crushing it here this week. Hanging out with you guys here for about an hour and a half or so. Life is good, man. Life is good. Good morning from Sweden. Nice to see you on YouTube. Long-time follower here. Appreciate you following, Christopher. Appreciate you joining, sir. Where's everyone tuning in from today? All right, so down close candle here. Want to see if that can support price. Let's see. I have too much lines. Let me take that off. All right, so something like this here. So two down close candles. If we stay above that order block, that would be bullish for the buy side, and then that gap, and then eventually back here. If we lose that order block, that would not be conducive here to higher prices, and then I'd have to either reverse my bias or consider if we're just going to consolidate here for the rest of the session. But last line in the sand would be just below this order block here. So if I was trading this setup, I'd look for a probably fair value gap entry here, and then I have my stop just below the down close candle here, because that would give me 3 PD arrays from my entry to my stop loss. And then if we look at S&P, it's just dropping down into its first presentation in bet pool. No, actually, yeah, I would use this as the first. Yeah, so it's trading into its fair value gap here for support. So we need to see S&P and NASDAQ supported here at this key level. All right, so S&P is looking good. Gap traded down into. Use the support here. Man, it's like we've been having decoupled markets just about every day now. So if we look at the Dow, this thing's ripping. Nasdaq's having a hard time. We want to see Nasdaq trade in sync with the Dow. So Dow's ripping. S&P's bullish. We want to see Nasdaq also catch up. So bullish order block, 2 down close candles, still supporting price. You can see the wick trading into it a little bit. That's fine, but look at where the bodies are stopping. That's exactly what you want to see. And now look at what they left here. Equal highs, right? Equal high here, relatively equal. But need to see Nasdaq move with S&P, right? S&P's bullish, making higher highs now. Need to see Nasdaq catch up and do the same. All right, let's go back to Nasdaq. Market's moving real slow today. Real slow today. Hopefully we clean up the session. I don't prefer to see all this back and forth, right? And what I mean by back and forth is a lot of overlapping price action. So I took good attention to the 2 down close candles order block. You could also use the breaker here. This is also a good level here. Right, extend that through. Look at the bodies there. So it trades down into it. So they're both valid levels, right? Bullish breaker, bullish order block. Just a matter which one you're using. Equal highs here. About to get smoked. I want to see some speed above this high though, because if we're going to keep reaching higher into this gap here, let's make that. Let's put that back to blue. That's good. Yeah, if we're going to reach up into this gap here and potentially back up into that 788 level, then I want to see some speed above this high. I don't want to see the market fuck around, take a long time. I want to see it really run. One of the things I'm measuring when I'm in a trade is how fast the market's running to my targets. Tells me how good of a market condition we're in. When it's really loose, easy trading, you get in, it runs your targets. Kind of like the trade that we were taking yesterday live, right? Got in that first presentation gap, 0 drawdown, straight to targets, easy trading, and that's a low resistance liquidity run. So what I'm measuring when I'm watching price action is how willing is price to run to my targets, or how much is it stalling, retracing, consolidating. Those are all things that give me insight into the market profile that we're trading that day. All right, so now the buy side's here, and now again they left equal highs here. For order flow, to remain bullish, want to see down close candles keep supporting price, right? Like here, down close, support price, down close, supporting price. We need to see that continue. Even if it's just going to slow grind higher, it should still follow that. So a lot of times you'll see me keep toggling the charts on regular trading hours, because what I want to see is what the price action looks like on RTH. And if you look at so far, we've gotten off the open really sloppy, a lot of back and forth, right? Still doing what we want to see it do. Just a lot more back and forth, give and take, spending a lot of time inside the same ranges, right? So down close candle here, being traded into, would want to see that support price. Still have the decoupled markets. S&P's reaching up really nicely. It's already taken out the buy side here, and Nasdaq is just not joining the party at all. Same thing with Dow. Dow strong, showing strength. Yeah, Dow's really strong, taking out buy side. All right, so the same highs that I'm looking for on Nasdaq, we're just taking out here on the S&P. So from that gap here in ES, let me see how many points that offered. See, that's why I'm not a big fan of ES right now, because even just from that gap here to this high, that's a decent little run, but it's only 4 3/4 points. So it's not a whole lot to get in there and really take something. So it's not a market I'm really trying to trade when the ranges are so compressed like that on the S&P. I mean, if it keeps running right to the highs that we're looking for here, right? I mean, it could give what, yeah, like 10, 12 points. I mean, it's decent, but not ideal in my opinion. But still have decoupled markets, and for those guys that don't know what decoupled markets means, it's when the markets aren't moving symmetrically, right? Normally the stock market should do what? Move together, right? S&P higher, Nasdaq, Dow higher as well. But when you don't see that, or you see a crack in correlation and you see Dow reaching higher, right, and then Nasdaq struggling to do so, that's giving you indications that the markets are decoupled, which means they're not moving symmetrically, like you would expect, right? For example, S&P higher high, then Nasdaq should also make a higher high, right? That's not going to happen in decoupled markets. What I wait for in that scenario is for them to get back in sync. So because S&P and Dow are rallying, And because I'm bullish, I'd want to see NASDAQ start to trade higher with those two other averages. So S&P reaching up here really nice. So that should take NASDAQ up with it. So one of the things that I do as soon as I identify it's a high resistance liquidity run with a lot of back and forth here, what I'll do is I'll just trade half my usual size. So like let's say I'm trading 2 minis, 3 minis is like my standard size, then I'll just drop it down to 1. Just because in this type of price action here, I'm not interested in risking a whole lot. Once they let NASDAQ trade out of this range and move higher with S&P and Dow, then NASDAQ's really going to run. All right, buy side cleared here for NASDAQ. Let me see, did it reach that high? Let's see, 746. Yeah, so it matched it perfectly. 746 right there. All right, now we want to see it rip through that high and get into that inefficiency up here. You may be asking why that high? Like there's all these highs here. Why this one? If you look at your range, right, from high down to the low, let me take off the quadrant so you're not confused. And then you see this midpoint here. Let me make that thick so you can see that. You see this midpoint here, right? That's your equilibrium price point of the range. So there's a high and there's a low. That's your dealing range. What's the first high above equilibrium or in a premium market, right? Because what you need to understand is that anything above equilibrium here is a premium market, and then anything below equilibrium is a discount market, right? So if we're bullish and we're trying to go long, right, smart money entities are going to look to buy in a discount, right, down here, right, the bullish order block, the bullish breaker, or if you're really aggressive, buying the sell stops down here on the 930 Judas run, right? Those are all things you can do. Then once you start getting up into premium here above equilibrium, you want to start covering your position, right? So if I'm buying and I'm trying to go long, I'm not going to go long in the premium or the high end. I'm going to go long in discount. And then once we're in premium, now I'm covering my long position, right? Which means if I'm already long down here, then I'm going to start selling here, selling above the highs as we start digging up into premium. So that's how you use premium and discount. That's how you use that for drawing liquidity, right? So I gave you that high. It's not any random high. It's this specific high that's above equilibrium. And then this inefficiency here because it's above equilibrium as well, right? So you go long, you buy discount, you sell premium. That's smart money trading 101. That's just the basic stuff. So far, where are we at? 9:30, they open, they drop it into what? Sell side and below the midnight opening price. I wonder who buys there. Smart money entities, right? Talked about the shift in market structure, bullish order block, bullish breaker, buy side here, equal highs toasted. Now we have this fair value gap here. And just like we said, every down close candle supporting price. Order block, down close here, trades into it, finds support. Just like reading sheet music when you know what you're doing. Boom. Fair value gap delivered. Let's look for the midpoint here now. Midpoint's going to be a good level, so look for that 761. So you see S&P absolutely ripping. It's trading for these highs up here. So the buy stops that are there, they're going to want to toast that. Boom. Buy side smoked here on the S&P. Inefficiency delivered here. So now we as smart money, we're selling our position here, right? We're going long down here, and then we're selling here, and then eventually at this high here. So you can see how that premium and discount is very important. Got to know what you're doing in terms of where are we at in the range, where am I going long, and where am I covering my position. Hey guys, see your questions. Trust they're awesome. I'm going to come back to them. So if they're in there, I will come back and revisit it. Just got to stay focused. I know I'm making this look easy here, but trust me. So it's a lot of concentration. So we're looking for the full gap to be repriced into there beautifully. Now this should become a IFEG. Right, so we want to see the market get above it, support, rally. And this is nothing new. This is stuff we're doing every single trading day. This is the easy stuff. See if I can pull this up here for you guys. Oh, there you go. So just a little scalp here on my funded account on both of them, adding around 1,200. Yeah, 1270. So about 1,270 bucks. So why do I even show you that? Not because I'm trying to impress you with the money. I don't really give a shit. It's just a funded account anyway. I'm already paid on my live accounts. But you guys can see, this is money making shit. If you know where the market's going, you know how it should behave. 930, that's a Judas swing. It's almost like the one setup model. One setup for life. It's almost like it's working, right? 930 Judas, shift in market structure, go long, target the buy side and the inefficiency. And then eventually this high here. But I don't need that to get paid because I said one contract on. As soon as we get into a deep premium, I'm comfortable paying myself there. And that's just me adding some extra numbers onto a funded account. That's not me trading my live accounts or anything like that. Live accounts are already paid and good to go. So I'll do some extra damage on my funded accounts if I want to run up some numbers. One of the things that I've done for myself here as a full-time trader is I've diversified my income streams. So I just don't trade one live account. I actually have two live accounts. And then in addition to that, I also do a little bit on the prop side. I don't trade a lot of prop. A lot of people ask me, where are your payouts? Where are your payouts, bro? Like I have a lot of payouts from when I first started, but I don't trade funded accounts anymore. When you start managing 6 figures and higher in real capital, funded accounts aren't really something that you're really interested in at that point. Because the whole goal with funded accounts is to eventually scale and get your own capital, right? So once you're able to do that, there's really no point. All right, so let's get that midline on here. All right, so we drop down using that inversion fair value gap here as support. So we're not saying, right, like fair value gap, oh, should trade up into it and sell off. Not at all. We want to see it get above it, support, and then rally up into that buy side here. Because remember, what that high is at the 780 level, right? Let's go back up to that daily chart here. That's this high back here. That's this high back here on the daily chart that we've been aiming for since way back here. But because they just did this little shallow run, and by shallow run, I mean, they just traded into it like 6 points. So in my mind, I think they're going to want to dig a little deeper into it, which is why I'm using that as my bias today. So I'm not looking for lower prices. So Leon, you see what we're talking about here today, my man, with regard to when the market's at all-time highs, man, just keep trusting your buy models. Because while you can still go short, right, you can still take short setups, I'm more so trying to focus in line with that higher time frame institutional order flow. So we got 10 o'clock news now, and we're looking for buy side here. And it's just medium folder news, so it's nothing crazy, but medium folder news. So we got the buy side here. They should use that news to take it up into there. So you see how the news that comes out at 10 o'clock is just accelerating what's already in motion, right? The market's going to go to this high regardless of whatever those bullshit numbers say on Forex Factory. It's just going to induce the volatility for the market to actually get to those levels, right? So it's not that the news, oh man, buyers are coming in strong, guys. News came out real positive. It's ridiculous, right? It's ridiculous. Order flow's bullish. Market's going to seek this high, and the news is just the excuse for them to do it. Inversion fair value gap, bang. All right, guys. It's 10 o'clock. Sorted out price action. Take some questions and look to get out of here. So now that I got the price that I'm looking for today, I'm not really interested in anything else. I'll go ahead and take your guys' questions now. Buy side here on the S&P, toasted. And then we were talking about how they were holding NASDAQ here, right? And NASDAQ was going to look to catch up. And then you see once they let NASDAQ go out of that range, how it just beautifully ramped up into all these highs here. Right? Because retail is trying to go short, right? They say, oh, the market traded higher. We've been going up a lot. The market needs to drop. It can't keep going higher. But if you don't understand that the daily chart, let me take off all these drawings. I know that's a little too much here. You got to understand that the daily chart is in an expansion though, right? Because we've already consolidated. So from consolidation, market goes into an expansion. You don't want to try to short an expansion move. Because it'll just tear your face off. Community, was this exactly what we did yesterday, right? Midnight opening price, they dip down below it. That's the Judas. Smart money accumulation, right? Because again, if smart money is going to go long, they want to buy at a really good price, right? So what would be a good price? Well, if we have a range here, right, on the 15-minute chart, if we have a range here on the 15-minute from this low to this high, and they drop it below equilibrium into a discount and below that opening price at midnight, right? This is what a discount market. Who's been taking notes, right? We got a discount market here. Smart money buys discount markets, right? So they're going to buy discount. If you're a smart money entity and you're trading like you know what the fuck is going on, where are you going to sell your position? Well, if you want to buy down here, you want to sell it what? More, shit. You want to sell it more expensive, right? Where would that be? Well, there's willing buyers up here because there's people that went short with the buy stop here. I don't care who it is. We just know there's buy side. The market's going to trade up into that. So if you're a smart money entity, what are you looking for at 9:30? You're looking for a drop into a discount for you to buy. Then you're going to ride the real run higher. And that's smart money trading 101. Make a video on daily buys, bro. Awesome, man. Yeah, that's something I'll look to do. That's a good one. Howie, Chris, good morning to you guys. Eslam, happy Friday to you, sir. Andrew, good morning. Ray, hello, hello. Christopher, long time for Sweden. Glad to have you, brother. Jonathan, dealing with the second U.S. data release around 10 a.m. with the manipulation happened 30 minutes later than normal. I think we were able to sort all that out for you, Jonathan. Buys is bullish at 9:30. They sink it into sell side below that midnight opening price. That's the Judas swing at 9:30. And the Judas just means it's a fake run, right? The Judas goat is the goat that leads the other goats to the slaughterhouse. So the Judas that drops at 9:30, that's taking retail to the slaughterhouse because most retail traders are just gamblers. So they're in here at 9:30 doing what? Rolling the dice, baby. So whatever direction the market breaks out in or moves at 9:30, most retail traders are just going to chase that. So at 9:30, they give that little suckers play there, and then they just absolutely tear their face off, ripping it higher for those that tried to go short. And those that saw this as, well, there's one low, there's two. Now that's really strong support now, right? Because it hit it once, hit it twice. So it's not just a regular support, it's strong support because it's a double bottom now, right? So when traders see that, they do one of two things, right? They either put a sell stop there because they're already long, or when they see it traded through, they want to go short because they see that as weakness, right? They see the market's bearish because it broke through support. We don't give a shit about any of that. We're just looking for the market to trade down into that liquidity for a smart money entity to go long to then distribute above these highs. That's some people commenting on some of my recent YouTube videos with regard to the markets aren't really a zero-sum game. Like everyone can make money. That's the dumbest shit I've ever heard. If you're speculating in the markets, somebody has to be losing their ass, right? Like if I'm long, someone has to be short. If I'm short, someone has to be long. Like money doesn't just get magically created in the market. It's simply transferred. And I'm showing you how it's transferred, how the smart money is thinking to transfer that money into their account instead of probably what most of you guys are facing, which is money being transferred out of your accounts. Yeah, Jonathan, hopefully that makes sense, sir, with regard to the high impact news. So the 10 o'clock news is just going to do what the market was already going to do anyway. Chris coming in from London. Awesome. Kieran, South Africa. Sweet, sweet. Joining from Nigeria. Awesome, awesome. A lot of love for our Nigerian followers. Londoner in Vietnam. Awesome, awesome. YM is very bullish. Yeah, Kieran, man. Dow is just out of the gate today, man. Ripping. Good morning from Lithuania. Awesome, awesome. Dylan, good to see you again, Omar. Glad to have you, Omar. Retain Tyler and Tanya already long. Who the hell's Tyler? I know Tanya. That's awesome. Glad for her. I'm sure she's banking. I'm sure Tanya's banking. What about the 15-minute CISD? So do keep in mind, guys, if you guys are seeing something different than me, like for example, let's say I'm using this 1-minute order block, but you're using a 15-minute order block, right? Guess what? We're still making money. So the cool thing is you can have different levels that make sense to you on a time frame you're looking at, and we can still reach the same conclusion. So that's the big thing about these concepts is there is no right or wrong. It's just, do you know what you're doing? And if you know what you're doing, it works on all time frames. So even if you're looking at other levels than me or someone that you're working with, it doesn't mean that you're looking at the wrong level or it's incorrect. If you know what you're looking at, the 15-minute chart can make you money. The 5-minute chart can make you money. The 1-minute chart is making you money. All of them make money if you know what you're doing. Retain, they were, oh, YouTube as well. Dow was ripping. Yeah, while NASDAQ was trading lower. That's why I didn't take longs. Yeah, I mean, if you pass up on trades when the markets are decoupled, there's nothing wrong with that. It's not easy to trade it when it's decoupled, or it can be a little more difficult. You really have to know what you're doing. Essentially, is what I'm saying. When the markets are decoupled, they can add a lot more complication to the trading day. Chris, if you was in a trade now, do you exit or you wait? Do you wait for target? Good question, Chris. So it would depend on a few factors, right? Like if I had a couple contracts on, right, what I would do is take a long that I did here, and then I would cover one inside that gap here in a premium, just to make sure I get paid, right? Because what happens if the market just does this? It trades up into the gap and then sells off. It's not likely because I think the market's seeking this buy side here, right? So I'm not expecting it to do that and sell off. But what if it does? I want to be able to get paid regardless. So if I just have one contract, once I'm in over 30 points of profit, I'm just going to pay myself on a Friday late in the week. I'm already really paid. So once you're making a shitload of money, you're good to go. You don't need to really hold for a whole lot. If I had two contracts though, what I would do would be hold another one for this high here. So it'd be long here, cover one here, and then cover the other one here above this high. So one inside the gap, one inside this high. And that's what I would do if I had a couple contracts on. But I just had one, so I just paid myself inside that gap there. Alan, one of my biggest doubts in trading is knowing what's behind those two doors back there. It's a secret. It's a secret. Omar, you're right, Dylan. Currently building my funded accounts to get payouts. There you go, man. That's the goal. Roll those payouts into a live account, trade real money, and not any of that funny money bullshit that a lot of these prop firms are trying to do, man. Some of the stuff Apex has been doing has been insane. I'm seeing they're like having traders have to like record their own trading and like write down their strategy and send it in and just do all types of things. That's just unbelievable. I mean, I guess it's good, you know, if you're getting started, but always good to graduate to have your own live funds here. All right, so if this thing keeps ripping, we got the 871 higher. If you guys remember, we took it from the weekly here, right? It was two levels we were looking for, the relatively equal highs here. This one here at the 780, and then we have this high back here. So these two relatively equal highs on the weekly chart, market's expanding higher. So I know a lot of the times you guys see me on a 1-minute chart walking this thing like a dog, showing you the fair value gaps, the order blocks, exactly where it's going to turn from on S&P and NASDAQ. But do keep in mind that only comes from my understanding of the weekly and the daily chart, right? Because the weekly is expanding higher, it's easy for me to go in there and look for long setups, right? It's easy for me to trade long when the daily is bullish. So I know it's easy to really get sucked into these 1-minute, 5-minute, 15-minute charts, which they're great, but you have to understand that higher time frame for that precision to be there for you. Chris, showing the trade answered your question. Awesome. Howie, Dylan, like reading it like a book. Well done. Thank you, sir. This is something we do every single day. You guys can tell. Not excited. Not the first time I've done this. This is shit that you can do every single day like clockwork when you know what you're doing. Jay, did you take any trade on a funded account? So do I really count that as a trade? Sure. Not really though. Like I said at the beginning of the stream, I already hit my profit goals for the live accounts that I'm trading, so I'm content with that. So you may be thinking, well, Dylan, I mean, it was a really easy trade today. Are you upset you didn't take that on your other accounts? Not at all. Not at all. Once I hit my profit goals, very content with just being still. I've done it enough times where I've had really nice profits, get greedy, keep trading, make bad decisions, and then blow all those profits. How many times have you been in that situation? And it's totally avoidable with, once you hit your goal, stopping and being content. That's what's really hard to do as a trader, because obviously we have to deal with greed and all these other things, but it's not that hard. Just control yourself. Don't take trades once you hit your goal. And you guys would be amazed at how much that's going to help you actually stay consistent week to week and get out of that boom bust cycle of winning big, blowing up, and getting out of that. It's really easy to do when you have a set goal that you're aiming for. And once you get it, you stop. Jonathan, this is awesome. Did you get to a point of being a break-even trader? And what did you do to get into profitability? Yeah, phenomenal question, Jonathan. Absolutely. So I'm a firm believer in there's 4 phases that every trader has to go through to get profitable. When we all start, we're all losing our ass. So everyone's losing their ass at the beginning. Everyone has to go through step 1. But after that, you learn how to stop losing your ass, right? You learn how to stop the bleeding, how to control yourself, not take bad decisions. And then that's where we get into the break-even phase, right? So from losing our ass, we go to break-even. And then once you are in that break-even phase where you're not losing, now you put yourself in a position to start getting profitable. So then that third phase is once you're break even, you then graduate to small profitability, right? No one goes to millions of dollars in their first month or in their first week of profitability. So you go from losing, break even to small profit. And then that 4th step is when you really start to scale. Because once you're consistent with a little bit, it's easy to scale. Like even the folks I'm coaching and working with, I tell them, like, even if you just learn how to make $100 to $400 a month with a micro, I don't give a shit. That will scale when you do the math on 1 mini, 2 minis, 3 minis. And then that same $100 or $400 that doesn't feel like anything with a micro actually becomes a whole lot of money with a mini. But you have to be able to scale the right way and do it in a sustainable way, because it's not reasonable to say, all right, well, let me start trading this huge leverage right away. Like, it takes time to grow into that. So that's my thought process on how to, or what that process even is, and then how to get through it, which is getting consistent with a little bit and then scaling that over time. There is a right way to do it, and you don't want to scale too quick and be in a rush to do that, because that's why most traders actually end up blowing up, just trying to do way too much, way too fast without a proper game plan. Great question, Jonathan. Cyclops, Dylan, walking the market on a tight leash as usual. Appreciate you, my man. Did you lock it in today? Salman, what were your entries? Just bullish order block here. Just going long here off this order block. Really using the breaker here too, right? So we had a breaker with the bullish order block. So really 2 levels. Neither one is wrong or right? The order blocks works, the breaker works. It's all making money. It's all making money, guys. Storm, how much does it cost to buy your strategy? Yeah, great question, Storm. So with what I offer, I don't offer just like a little basic course or just here's my strategy. If someone's going to work with me, it's A to Z. It's everything you need, working with me, one-on-one calls, mentorship content, live trading with me, doing this every single week, watching me trade with executions on screen. So it's a lot more than just like, yeah, here's my strategy, bro. Like it's a lot more to it, and it's designed to be complete. So it's not designed to just be like a little gimmick or anything like that. It's designed to be everything you need. And if you want more information on that, you can check out our Discord. Make a video on daily bias. Yeah, I saw that. Absolutely. That's definitely something I'll look to do. If daily bias would be helpful, comment below, let me know, and maybe we'll do some daily bias teachings. Because if you look at my trades this week, everything has been long. Everything has been long. I went long on Monday, didn't trade Tuesday, Wednesday because we had the Fed chair, and then went long on Thursday. And why is that? Because I'm trading with the tide, right? Like, look at these daily candles here. Who in their right mind would want to go short this? I mean, can you take a short or scalp it? I'm sure, right? I'm sure you could. But why would you want to, right? All the easy explosive price runs are going to be higher. So why not just trade with that? So daily buy is extremely important, and it's really what keeps me on the right side of the market just about every single day. Storm, because I'd love to learn your method. Yeah, and I'd love to teach my method. So if you're interested, like I said, join the free Discord and you get more information there and see if you're a good fit for what it is that we offer. I will say, though, it is very exclusive. I do keep the quality of my community top notch. So you do have to get on a call with me, apply, make sure you're a good fit for what it is that we offer, and then we'd be able to have that conversation, Storm. But if you're serious about making this work, making this into a full-time income, I'm happy to get you there. Kevin, happy Friday to you, brother. Hope you're doing good, man. James, always finding a gem every time you teach. Thank you. Love to hear that, man. Appreciate you, sir. Appreciate you. Yannick, great stuff as usual. Appreciate you, Yannick. Thank you very much, sir. Eslam, market structure shift is closer to the high. Is that correct? Is closure above the, closure above the high. No, that is not correct. Really good question, Eslam. So no, you do not need a closure above the high for the market to shift the market structure. You just need it to pierce the high. So let's go and zoom in here. So this is the high I liked for the bullish market structure shift. And you may be asking why. It's because the high that makes the run lower is the high I like for a market structure shift. So this high did what? It began the run for sell side. So once this high is taken out here, that's enough for a shift in market structure. So as soon as I saw that, I took your attention to this gap and said, all right, we want to see the support price. I didn't like how we closed down below it, but then as soon as we got above it, I'm like, all right, now this should act as an order block. So as soon as we see a shift in market structure, that sets everything in gear for a buy program. What does a buy program mean? It just means the market's going to be offered higher because it's going to seek liquidity or inefficiencies above market price. How do you think I gave you these levels, right? It's because the market's doing very basic, simple, specific things. So as soon as we see that shift in market structure, that's the trigger. That's like your CISD, that's your change in the state of delivery, where it's changing from a sell program to a buy program, or in other words, a market maker buy model, right? And that's what we basically sorted out here on stream, the buy side of the curve here. And then you can see that inversion gap here being used as support. So it was used initially as a target, but if the market's going to reach up for here, then it's going to use that gap as support. That's just simple gap theory. Yeah, so no need for a closure above the high. You just needed to pierce it. Franchise, anyone catch those longs? I have no idea. High speed, been a while. Good to see you. Good to see you, my man. Hope you're doing fantastic. Good to hear from you. Thank you very much, sir. Are there Fridays you don't trade besides NFP week? I have nothing against Fridays. Every single day, the good thing is every single day the market's doing what you saw here. Every day the market's running to highs and lows. You just have to know narrative as to how it's going to do it, right? And what do I mean by narrative? Well, if someone's going to make money today, we understand that someone has to be losing their ass, right? So at 9:30, they drop it first into sell side, right? That sets the trap for traders who want to go short. And then they send it higher. So every single day, if you just look at your charts through the lens of time of day and liquidity, you're going to see every single day the market's running the liquidity. You just have to be able to determine what liquidity is it going to run to. So as long as it's doing that every day, there's setups every single day. The only time I'm a little more... The only time I really don't trade is NFP week. NFP week, Wednesday, Thursday, I'm not really interested. Outside of that, well, and Fed share. Fed share is one I do not like to touch. Fed share, I don't fuck around with, and NFP week, I don't trade too much. I usually use that time to rest from the markets. High performance in trading, like I show you guys, is very demanding. It's extremely demanding to be a high performer in trading, so it's very good to schedule time away from the markets, which is usually what I use non-farm payroll to do. But Fridays are fair game, especially if there's high impact news like today, right? We covered, right? There's high impact news today. So if I see high impact news like this or like this, I'm licking my lips. Why? Because I know that I'm going to have a trade that's going to be beautiful on days with high impact news. Because you got to think, right? What's retail saying? All right, 8:30 news came out right here. Let's go ahead and show you that here. Right, we see 8:30 news comes out here, right? On this candle. What do they do after that news? They drop it. So what is someone that's looking at fundamentals, right? What are they saying? Oh, look, the news came out. The market didn't like it. It dropped, right? A lot of selling pressure coming in to take the market lower on the news. And then, you know, you'll see CNBC, all these other financial channels talking about how the market didn't like the news, the market's dropping. And then look at what they set up at 9:30 just to tear everyone's face off. So when you understand how the markets truly operate, it gives you so much clarity as to what the market's doing. And this in and of itself is a Judas swing, right? So we talked about 9:30. This is like a little micro Judas swing here. This is the real Judas swing. Starting at 8:30, that's all a Judas swing right there. Because the Judas swing is just a fake run against a higher time frame direction. So if the market's going to trade higher, this run's just a fake run to get traders short. RJ, I entered before the stream started. Damn, man. Entered before 9:30. Long? Man, you had to hold through quite a bit, RJ. But, man, good thing you held on to that bull, man. You probably had to hold on through quite a bit, though, through all this. I wonder what your entry was. All right, so we just saw a little retracement here, guys, getting back onto price action. All right, so 5-minute fair value gap, trading down into that, using that as support. I still think the draw here is going to be the 871 level here. That's only 60 points above market price, and it's so close. Those are fund level stops, so that's going to be a huge liquidity pool for the market to want to absorb. So if you're trying to go short, be careful. That's all I'm saying. Tyler, it's 100% worth it. Appreciate it. Appreciate it, Tyler. Appreciate the vouch. And Tyler's a member who's been working with me since last year. Recently just took out 15 G's in payouts. Huge congrats to him. He put in the work. He deserves it. And that's what's possible with having a process and working hard, right? If you work with me, there's no secret, right? You're still going to have to work your ass off, but you're going to know you're going to make it. Izzy Daily Bias, I got you covered. Jonathan, do I use the central bank dealers range or the flout at all in your analysis? I use forms of that. I use what I think is ICT's more refined form of that with the midnight opening range. So there's a lot I'm doing with those ranges. There's a lot I'm doing with the opening range. But I personally do not use the central bank dealers range or the flout. No, those are not two I use. I use mainly the, like I said, the midnight opening range and then the opening range from 9:30 to 10:30. So when I tell you guys I'm doing measurements on my screen like that, those are the things I'm doing on my screen because I want to have all those measurements to make the decisions that you guys see me doing. There's a lot more like that you guys aren't seeing on these screens that I'm doing, but that's why it takes a long time working with me to learn it. Not because it's overcomplicated, but because it takes time to learn everything I'm doing in logical succession so it makes sense. Cyclops, give the stream a like. Yes, please do. If you guys found some value here or found someone insightful, please do give the stream a like here. And I just want to clarify, just because I said I do like the market to trade higher, I'm not telling anyone to go long here. If you know anything about how I trade, this would be the stupidest place to buy, right? We already took out buy stops. Your retail Rick chasing price above the market. That is not a good idea, right? So just because I said I think we're going here, right? The long had to be down here, right? You don't buy and chase a breakout here. That's no good. You have to buy in the discount, like I was covering earlier in the stream. Andrew, very educational. Dylan, just discovered your channel last week. Great work. Thanks, Andrew. Appreciate you joining, sir. What was your entry today? What time? Let me see if I saw that pulled up. 9:41. 9:41 here inside this down close candle as we were trading into that little order block there. Going long here. And breaker, right? So breaker with the order block when the market's bullish. So again, while I was saying, yeah, the market can trade higher, I expect it to based off where we're at. I wouldn't put my money on that, right? Because the easy trade was down here, right? Close to the 9:30 opening price when the market's bullish, right? We already expanded, so that's just chasing price in my mind. One of the things that I consistently hammer down with those I'm working with is the difference between smart money and retail. And if you've been working with me for any length of time, you already know this, but it's so important, right? Because retail is a very different mindset than smart money, right? Smart money predicts, meaning we're sitting here anticipating shift in market structure, change bullish, take out this buy side here, then get to this gap, then get to this high. That's all predicting price, right? Retail traders are going to react to it, right? So they're going to gamble, watch it run, and then they're just going to chase around with market orders as it's running higher. So that's the difference between the gambling retail perspective and the smart money, which is smart money predicts and retail is just reacting to whatever the market's giving them. So it's a huge paradigm shift that you need to have if you're going to trade successfully with smart money concepts or what it is that I'm showing you guys here. Ray, great stream. Thank you. Daily bias would be awesome. Yeah, love to share that with you guys. Jonathan, cool. Thanks. Yes, sir. All right, guys. So there's my 60-minute workday as I showed you guys in the one setup for life. Right. The reason I am such a big fan of 9:30 to 10:30, and you guys saw it here again today. Let me see if I can get that up here. It's such a beautiful time to trade. Let's make it, what did turquoise? If you study this section of price action every single day, 9:30 to 10:30, you're going to see the most beautiful, easy price runs there are. And this is why this time window, 9:30 to 10:30, it's such a good sweet spot for trading. And if you know how to use higher time frame bias, you know how to frame a manipulation, right? You understand that this is a Judas, that this is all a Judas here, and that we're going to see a real run higher. It makes everything you're doing so much easier as a trader. Alrighty, guys. My problem is now that I hesitate when I see my strategy, then I FOMO after I hesitate. Yeah, no, that's completely reasonable, Tar. One of the big things that you actually need to do to trust your strategy, to have confidence in it, is you need to study it. You need to backtest, right? Like what I just showed you guys here. Like that's not something I started doing a month, a year, 2 years after starting on a trade, right? It took me a long time to get to this point. The only way you get to a point of trusting it is what I shared in that backtesting video. Like if you are not backtesting and spending at least 45 minutes to an hour every day studying your charts, right? Studying these things, right? Everything I shared here, right? The Judas at 930, the bullish breaker block, the order block. Look at how on this run higher, every single inefficiency or down close candle supported price, right? Down close candle support, down close candle support, fair value gap here, support, fair value gap here, support, down close candle support, all the way higher. So if the market's doing the same shit every day, all you have to do is study and get good at recognizing it. And then once you get to that point, you're not going to have that same uncertainty when it comes time to execute. The uncertainty is there because you haven't prepared. And I'm a firm believer in confidence comes from preparation, right? So if you prepare, if you do the necessary work, you're not going to be second guessing. You're going to execute exactly where you should, how you should, because you studied and you've put in the right work. Ryan, TGIF, could the high of the day be in? Because the TGIF very well could be. Very well could be. If we look at the daily chart here, let me take all this off. Sorry, getting a little too busy. We have already reached major key level. So what I was looking for here mainly today was, remember we talked about when we started the stream here that, yeah, they did take out that high, but it was a really shallow run, like a really small run. Like this is a better run here because it digs a lot more into it. So these funds that are trading, they have buy stops above the high, but they don't just put it right at the high. Sometimes they'll put it like a few points above it. So the market's going to want to drive up into that liquidity to consume all the liquidity that would be there. So that's why this was just a small pass for me. And I was thinking they would do another deeper run into that level like we saw here. So now that we got that, I'm neutral, right? So I'm not worried about price action at all. Could the high of the day be priced in? It could be. Could it keep going higher and reach for this level? It could. So I'm 50-50. I'm neutral because I'm content with what I've already done today. But if I kept watching price action, I could eventually sort it out. So that's what we'll do here. Gap here, we don't like how we traded down below that. So if we stay heavy and we keep selling off, then we very well could see. How much of a run would that be to TGIF? I think that would be an insane run. So you got to measure it from the low to high. There we go. Yeah, that would be a massive drop. Yeah, so for TGIF to be in play, the market's going to have to sink 200 points. Am I going to try to short the market 200 points in a bull market? I'm not really interested in doing that. I want the easy trades like this that are easy to see. Masood, I still cannot add you in Discord. Like, what do you say, my man? Like, join the, you're not able to join the Discord, or you're not able to add me specifically? Love from India, bro. Thank you, sir. Yeah, not able to join the Cord. Yeah, I'm not sure what's going on there, Masood. Let me see what I can do for you. Wait, I think you already reached out to me on. Let me see. Having to wear all the hats now, doing some customer support here also. Joining Discord is not available. Yeah, that's strange. I'm not sure what's going on, man. Yeah, just Masood, just go ahead and do me a favor, man. Just reach out to me on Discord, and I'll have my team get you sorted out so we can get you in there, and you don't have any issues with that. Tyler, $300 run lower from the TGIF high. I don't know. Yeah, I'm not favoring that. I mean, it could, right? I mean, crazier things have happened, but I mean that's a pretty deep drop. I mean, we have to erase the entire range today, and really most of Thursday's range. That's a pretty big drop. Very well could be though. And now, kind of like what we watched on the buy side of the curve here, watch the same thing on the sell side of the curve, right? If we're bearish, inefficiencies above market price and up close candles are going to act as resistance, send price lower. So that's how you study order flow. So if I'm not sure where the market's going, then I just have to read it candle by candle and get information for what the market's likely going to do. S&P, pretty nice run. 12 points. That's not bad. Man, to get in there with 3-4 minis on the ES, man, that's a pretty juicy trade there. I am from Kenya. Thanks a lot. Thanks, sir. Can you please send me the link? Yeah, I don't even know what link I'd send you. Let me see. Hey, just add me with the friend request. You know, I'll just handle it personally. Just send me a friend request on Discord. It's DylanR.24, DylanR24. I don't even know. Let me see. Yeah, because I know you've been trying to reach out to me. I just want to go ahead and hook you up, Masood. So just go ahead and reach out to me directly, and then I'll have my team like go ahead and get you squared away. No worries, fixed. There you go, man. Will you be able to do another live session on Monday? No, I will not be. I will be trading to make some money next week. And as much as I love hanging out here with you guys on YouTube, at the end of the day, like as much as I like being on YouTube, I'm not a YouTuber. I'm a trader. I'm getting good with this YouTube. I'm practicing with it. But at the end of the day, like I'm a trader. Like I'm really eating from my trading, right? I'm not sitting here begging for affiliate links. I'm not trying to do anything like that. Like I'm here focusing on trading. Like that is my number one thing. So when I am trading, I like to be in an environment of focus. And to be honest, as much as I love you guys, YouTube is way too fucking much for me to concentrate on what I need to do. Can I still do well? Yeah. But when I'm risking my live accounts and I'm risking thousands of dollars per trade, I'm not fucking around on YouTube. I'm locked in. I'm focused on what I'm doing, and I'm working with my mentorship group that is paying to watch me do that. They're paying for front row seats to watch me in the trenches every single day doing battle with these markets. And I'm not trying to do that on YouTube. Absolutely not. If I do have time, I will make some extra time to come out here with you guys on YouTube. That I do enjoy. But when I'm managing my live money, that's something I take very serious. Tara, it's not a free Discord. It's asking for a membership. No, there is a free section to the Discord, my man. There is a free section. For access to everything, then that would be a membership of working with me directly. Massive love from Nigeria. Awesome. Appreciate the love from Nigeria. So let's go up a time frame here. Get up off the 1 minute chart. All right, so 15-minute, what I'm looking at here is we have a fair value gap here with a breaker. So if we're going to be bullish here, we need to see the market find some legs here inside that level. Just find some support, I'm saying. So weekly candle to the downside here on dollar. Heavy, right? So that creates that risk on, risk off environment, right? So we see dollar selling off, right? Big, heavy down close candle on dollar. And that's going to give strength to NASDAQ, right? Because that's that risk on, risk off relationship, which is if the dollar is dropping, right? Money's coming out of the dollar, going into risk assets. What are risk assets, right? Like the stock market, like NASDAQ. Foreign currency, right? Like euro, pound, right? They're all going to see lift when the dollar selling off. Bitcoin, another risk asset, is going to see bullishness. So that's that importance of what we do on Sundays with the weekly outlook. Because if you don't know where the dollar, if you don't know where all these higher time frames are going, right? The problem for some of you guys is going to be you're zoomed into the 1 minute chart trying to make big financial decisions. When in reality, you got to be looking at those higher time frame weekly and daily charts to be able to sort out all that information in a way that's going to be effective for you. Do you have a paid mentorship? Yes, I do, Johnson. How often do you trade live? 3 to 4 days. Usually 3 days a week. Three days a week, I'm able to get paid, get what I need, and then the other days it's just teaching risk management. And by teaching risk management, for example, like this week, right? If we look at the economic calendar, it's good. Pull it up here. right? If we look at the economic calendar, Tuesday, Wednesday was probably difficult for a lot of you guys, right? With good reason. That's why Tuesday, Wednesday, I'm not interested in trading, right? And if you look at the price action here, right, from these other days, drop down just like to a 1 minute chart. Look at the days I'm trading with you guys. And this is me speaking to my mentorship group. Look at the days I'm trading with you guys here, right? Easy price action, right? Yesterday, easy longs, easy price action. Judas at 9:30, easy run. And then look at Wednesday, right? Real choppy, nasty price action. And then look at where we at? Monday, also really nice, easy trading on Monday, right? So we're trading Monday. Tuesday, we avoided it. Tuesday was a slaughterhouse. This was Tuesday's action here, right? Absolutely brutal, right? So the days I'm not trading is going to be like a day like Tuesday, like a day like Wednesday, right? Where you see this really nasty price action, because I like to avoid this with my trading style, like with what you guys have just seen, right? And that's why, like, I hate seeing the ignorant shit I see on the internet sometimes about some people say every day is a trading day, or the fact that some traders say it's not high probability for them. That means they're like lesser of a trader. It's actually a huge strength to identify when your models perform well and when they don't, right? Because if I push a lot in this type of price action here, I don't care how good you are at reading price action, it's not going to be easy for you to navigate this here, right? Because you're going to get in, and even if you're right about it being bullish, look at everything you have to sit through. I don't like to trade like that, right? I like to trade like a day like this, right? Where you get in and it just rips your targets easily, right? This is easy trading, right? And this is basically what I want to focus on. So the days I'm not trading, it's because I'm avoiding high resistance liquidity run, and I want to trade the easy setups, the easy price runs. Big love from Morocco. Appreciate you, crypto man. I missed the one setup for life this morning and didn't FOMO into anything else. Watch price hit targets after locking accounts. Continuously working on that discipline, man. Just like we talked about, man. The only thing standing between you and taking out thousands of dollars of payouts month after month is just going to be getting that risk management, that discipline under control, man. So that's music to my ears, because I know pretty soon, man, you're going to be making money hand over fist as soon as we get that risk management dialed in. All right, so back to that 15-minute chart here. So we talked about the 15-minute fair value gap with the bullish breaker, right? Saying that the market should find some feet, find some legs there, right? To trade higher, we're doing so. And then we still got that 22,871 here in the crosshairs. I think they're going to take it up into that, right? Nothing is bearish this market. We're not trying to go short because we're looking for higher prices. And anyone that's been trying to go short this week has just been getting their face peeled off. Alrighty, guys. We're going on, what, about 10:30 already. I got some things to get done here today. Any final questions for me here before we get going? I'm in no rush, but I do got some things to get done here today. Mentorship group, we are going to be getting an institutional market structure here for month 4. So I'm going to be sitting down getting those lesson plans finalized, recorded, and out to you guys here by this weekend. So look forward to that. Tons shared this week already in live stream, so plenty for you guys to go through in terms of value, but we can expect everything to keep moving forward on that end, and I'll have those videos out about this weekend for you guys. Kevin, off topic, but what's that you're drinking? Oh, man, good question. A Americano or iced Americano. So I do like the double shot, triple shot espresso with ice and water. Dylan, I had a quick question. Yeah, man. What's up? No rush. Today's session and education are very appreciated. Yeah, appreciate you guys joining. Aslam, thanks for today. Yeah, my pleasure. Looking forward to doing more of this with you guys. Like it up. Thank you very much. Please do. Yeah, take your time with your question, Matthew. No rush at all. See you, Dylan. Take care, Christopher. Looking forward to the weekly outlook on Sunday. Absolutely. Yeah, I'll see you guys on Sunday. For yesterday's run higher, to get the external range liquidity, I was curious when you trailed your stop around the 10-15 low, if you were holding for the full run. Yeah, let's take a look at that. So let's go to, let me go to yesterday's action here. So I still have my annotations on here from yesterday. Sweet. All right. Okay, so for yesterday's trade, what I did yesterday was I bought the low of this fair value gap and then I covered above this high. 10, 12, 10, 12, 10, 12. Yeah, so would that be here? Yeah, 10, 12 a.m. So yeah, so I was long here, and then the market just ran straight to my targets, and I closed out for about 46, 47 points just above this high here. So there was no need for me to trail a stop because I just had one contract. But if I had two contracts, then I would have gotten long here. 10:09 here. Oh, for the pre-market highs? Oh, how would I manage it? Gotcha. Yeah, great question. So if I had two contracts long, then what I would do, entry here, cover above the high. And then if I'm holding for this entry all the way to the pre-market high or even that daily volume imbalance, which is those two black lines that we had yesterday. So if I'm holding for a run from here to here, that's 60 points. And then from here to here, that's about 85. So if I was holding a runner, what I would do is I'd put the stop at break even, and then I would let it ride. The reason why I would not suffocate it super tight is simply because if I'm looking for price runs that are 60 handles, 80 handles in the NASDAQ, which in this volatility is pretty good, I'm not trying to suffocate it too tight. So what I would do is I'd probably just trail it to break even. So if it comes all the way back down there and knocks me out, I don't want to be in the trade anyway. But I would just roll the stop to cover costs, and then I would let it run. And then as we create new PD arrays, right, like an inversion fair value gap, down close candle, down close candle, down close candle, I would trail it with the down close candles. So down close here, trail it here, down close candle created, trail it here, and then just trail it the whole way up. And then that's one way you could do it if you're aiming for the pre-market highs. Or you could just do what I would recommend, which would be just roll the stop to better than break even and leave it alone. Let it reach your targets. Because when we're trading, right, like I've coached you guys, when we're focusing on price action and we're trading, we're less worried about trailing the stop loss, and we're more focused with our limit orders getting hit, right? So like scared money, like traders that really don't know what they're doing, they're always in a hurry to put their stop loss at break even, jam the stop. And it's because it's that fear of, oh my gosh, I don't want the market to take something from me. But when you know what you're doing, you really want to be comfortable actually letting that stop loss breathe, especially if you're going to be holding for large price runs like we're able to see. So I would recommend leaving it at break even. Then as it's creating new PD arrays for you to work with, then you can trail the stop on the upside. So a lot of different ways to manage it. Just really depends on your trading style and what would make the most sense for you. Yeah, 10:07. I see what you're saying. Yeah, this low right here. Yeah. So yeah, okay, break even would be good, but for more precision, as you said, great. So what did the market do here? It dropped down at 10:07 into what? Into a 5-minute fair value gap. So we're expecting this to go from a retracement to a new leg of expansion. So what I would do with that information then for like ultra tight precision would be, as soon as we cross this opening price here, that's a bullish order block. So once we go from retracement to expansion, remember order block theory relies on understanding price delivery, because if the market's changing its state of delivery from a retracement to an expansion, then that's going to create a bullish order block, right? So that's going to be this order block here. So for more precision, you could see, okay, the market retraces the 5-minute gap. We cross that opening price. That's now a bullish order block. So then you can trail the stop below the low. And then as it respects it, trades higher, this down close candle now becomes what? A propulsion block. The reason it's a propulsion block is because it's an order block, right? That trades into this order block. So then you can trail it below the propulsion candle. And then this down close candle trades into that one. So now this is one's going to take the place of support. So you can trail it down below that, and then it'll run up into your target from there. So for more precision, you can use order block theory, dial that in. But good thing is each one would still get you that same end result. Yeah, awesome question. Man, thank you. Sorry about the question. No, not a problem at all. Not in front of my charts. Yeah, no worries. No worries. Glad you're still able to stop in, my man. All right, guys. So it seems like we sorted out the easy setup here of the session. And that's going to be it for today. Appreciate you guys joining us. If you found this one insightful and you guys want me to come out here more often on YouTube, tape read with you guys, let me know. I'd be more than happy to do that. Hit the like button. If you guys can run up that like button, then maybe we'll look to do the same thing here again next week. Appreciate you guys joining us. If you want to see more from us, get value every single day in our education channel, then again, be sure to drop into the free Discord where we're giving resources and value every single day for developing traders like yourselves. Appreciate you guys joining. Have an awesome rest of your weekend. Tyler, thanks. Have a great weekend. And the sun brother, will do, man. Gonna enjoy this beach, take it easy, and get some mentorship content recorded for you guys. I will see you guys on Sunday. Take care. Stay safe. See you guys then. Don't make any bad decisions. We already took down the easy setup of the day. No need to push it any further. Take care. Have a good rest of your Friday, everyone.